the pullback has pulled silver back versus gold, obviously. Never going to $50 silver again. MSA did not foresee the depth of this sell-off. I'll admit that. We did expect buy signal on silver, long-term buy. It was at 56 bucks then. There's a 6-month wide range here, and we just broke through the bottom.
Right.
Well, what do we got now? Similar situation. Silver's made repeated lows, being bought in the low 60s.
Yeah.
Finally, you blew it out this week.
Yeah.
Got to 55 and change. Right now we're 58, 59. Okay.
Right.
You cannot, if you're a bear right now, I'm going to tell you, you do not want to get back above 60 by much. You don't want to get gold back up anywhere near a percent or so above today's high again. If you do, they're going to blow your head off. They're going to prove that what you just saw in terms of downside breakage was a big trap.
Yeah.
And you just got trapped. That's where we stand right now. If these were price charts and you plotted those lines, you'd say, I got to buy that.
Oh, yeah.
None of the long-term, like annual momentum of silver and gold, this drop is just a drop. You're not breaking anything.
Are we facing a monetary metals disaster? And you pose the question, is there something bigger going on beneath the surface? Well, tell us, is there something bigger going on under the surface?
Yeah, the bigger thing going on is bullish for gold and silver. But there's so many assumptions that have been driving silver and the stock market, frankly, over time, and especially over the last, 3, 4, 5, 6 months. War is bullish for gold. Well, gold went down during the war. Okay, war's about over now, therefore it should go up, right? Well, it didn't do it. Okay, they don't know what to do. That news didn't work. Okay. War is bearish for stocks. Well, they tried to sell it off, and as we argued during that March sell-off in the stock market, it's going to make a new high. We're bearish long term, okay, in the stock market. And sure enough, it went up and made a new high. Now, I think the stock market has probably seen its peak, and you will start to see serious decline. But once we get down to certain key numbers, 5% or so below where we are right now. But there's too many pieces within the stock market that are starting to fracture off in big technical ways. I don't just mean slip in price, but cause major long-term momentum damage to their trends, annual momentum. I'm not talking about something that lasts a couple months, okay? I'm talking about something that when it breaks could last a couple years.
What if the biggest silver crash everyone is panicking over is actually the setup for the next explosive rally? Veteran market analyst Michael Oliver says the latest breakdown in gold and silver may not be the beginning of a bear market. It could be a classic bear trap. Even more surprising, he believes the stock market may be nearing a major top while precious metals are quietly preparing for their next big move. Let's break down exactly what he's seeing.
And at the same time, we look at the silver and gold situation, and fortunately, they've been going exactly opposite the stock market. So in other words, hey, the stock market goes down, gold goes down. Well, gold went down, guys. Okay, you had a good correction. We're 30% off the high. Silver's much more off the high. If you treat the high as a quote high, because it was really up there for a couple of days,
Yeah, right.
20. It wasn't like it lived up there for months. Right now, our technical work on silver and gold argues that this pullback is nothing but a major, sharp corrective process in a massive bull trend that is not at all completed. Okay. On the way up over the last couple of years, you can find versions of what we have just done at different and lower price levels. I'll give you an example. Back in October of 2024, first of all, in March of 2024, silver was still confined below that $30 high that occurred in 2020. But it was coming up through $25 in March of 24, not near the 30 high that occurred in 2020, but got up above 25, and we said, that's it, we're going to accelerate up out of here. And sure enough, they shot immediately by March. So in May, you were up to like 53, and by October of 2024, you're up to $35. Again, from that level at $25. So you blew out the 2020 price high at $30, and went up to 35 in October 24. Okay, they started to sell it. It dropped down to 30, traded below it, but never closed a week below it. Went back up to 35 again in March of 2025. So like 6 months later, you'd been in this 6-month distribution zone, constant selling, but they couldn't seem to break it.
Uh,
Was to get down to 30 and they'd stop it. So there's a little box there,
uh-huh.
6 months wide. Well, how wide are we now?
Yeah.
Well, at the end of this month, it'll be exactly 5 months since that January downside collapse, January 31st, I think it was, last
Uh-huh.
day of January. Anyway, about the same amount of time. And you were stuck in a range. Silver and gold generally. Gold would go down to the lower 4,000s and get bid up a couple times. And silver would go down, for instance, in February got down to 64, and ultimately in March got down to like 61 or something like that. The
Mm.
lower 60s was its support. So there was a range, just like occurred back in that 2024 to 2025 price zone of silver. It was
Uh-huh.
capped at 35. But before you were able to break through that ceiling that any idiot with a price chart could see,
Yeah.
you blew out the floor.
Uh-huh.
There was this range, 35 to 30, 35 to 30, and finally you broke through that $30 low and
Mm-hmm.
closed a week out like that at 28 bucks or something.
Mm-hmm.
So again, back then, if you were looking at a price chart, that
Yeah.
was a pretty horrendous drop. Okay.
Sure.
35 bucks to 27 and a half low in an April break of 2025. And so when he looked at the price chart, you said, hey, there's a 6 month wide range here, and we just broke through the bottom.
Right.
Okay. Well, what do we got now? Similar situation. Silver's made repeated lows being bought in the low 60s.
Yeah.
Finally, you blew it out
Mm-hmm.
this week.
Yeah. In
Got
the
to 55 and change. Right now we're 58, 59. Okay.
right.
Um, and oh, it's terrible. It's all over. You just broke through this big range bottom. We did exactly the same thing in 2025. Well, when we turned up from that low in April of 2025, by the time June came, you were headed back up to the highs, and we said, this is it. You're going to blow up again, upside. Well, you did. You went from 35 in the mid 50s in a heartbeat. Okay.
Yeah. Right.
But the first thing you had to do was blow the bottom out of the price chart range.
Uh-huh.
So everybody ripped their hair out and said, that's
Yeah.
it. We're never going to $50 silver again. Da.
Yeah.
And as soon as you did that, it was like over in a week. Next thing you knew, you were lift off again. I'm arguing technically we see the same thing now, not just on the price charts,
Uh-huh.
but even more so on our momentum charts. We're
Uh-huh.
seeing
Uh-huh.
you cannot, if you're a bear right now, I'm going to tell you, you do not want to get back above 60 by much.
Mm-hmm.
You don't want to get gold back up anywhere near a percent or so above today's high again. If you do, they're going to blow your head off. They're going to prove that what you just saw in terms of downside breakage was
Yeah.
a bear trap,
Yeah.
and you just got trapped.
Well,
That's where we stand right now.
I think you referred to that as a fake out flush kind of a deal.
Yeah, a
With
bear
regards
trap.
to,
Yeah, a fake out flush or a bear
yeah,
trap. Right.
because the chart, the price watchers are saying, wow, this is obvious. This thing is doomed.
Oh, terrible. Yeah.
And then the important thing is your momentum. I mean, I guess I'd like to ask you to clarify once again what sets you apart from a lot of the most other, if not all other technicians,
Most,
essentially, is
yeah.
this momentum and structural stuff, the name of your letter, essentially. And I noticed your last weekend missive, for example, you showed, price and momentum. And in this case, there was a decline in price over time. But at the same time period, there was an ascension in momentum in the gold. I think this was a gold daily chart. That's the kind of thing you're watching. Do you need to see momentum confirm price? Is that the way it works?
No,
So,
it's yeah. The what we've just saw, for example, if you look at a price chart of gold or silver, you took out all the lows of the last 5 months.
uh-huh,
Okay. So that's what negative, right?
right,
So major range breakout, it's all over, you're done. Okay.
sure.
But we look at momentum. First of all, momentum's not near the low we made in March.
Hmm.
On almost any time scale we run of silver, weekly, monthly momentum, you're not near where you were in terms of momentum sell-off. So you've got we call a non-confirmed low.
Right.
Price made a new low. Momentum said, what? I'm
No,
going to
no,
make a
it
new
it
low.
ain't happening.
But
Uh,
then the main issue is not the non-confirmation. That's a tap on the shoulder. That's all it
uh-huh.
is. Wet noodle indicator. We look for structural breakouts, meaning something when you go through it, you hear a snapping sound. You get a gush.
Uh-huh.
Right now, when we look at daily, weekly, monthly, 50-day momentum of gold, silver, we see nothing overhead but structures to break out through
Uh,
that are very, very close. So if you looked at the momentum charts,
mhm.
and plotted the overhead ceilings or downtrend lines that have been bumped and bumped and bumped.
Mm-hmm.
You get next week, next month, much above where we are now, like a handful of percentage points in silver, a couple percent in gold. You start blowing through all of these ceilings.
Mm-hmm.
Meaning, if these were price charts and you plotted those lines, you'd say, I got to buy that.
Oh yeah.
Now,
Uh-huh.
price doesn't look like that because, frankly, you could probably rally silver back up. You got to get above 90 probably to turn most heads because most of the rallies since the January drop
Uh-huh.
peaked just above 90. Okay.
Right. Right.
So they don't know where to get back in.
They don't know
Okay.
where to get back. It's the problem with
Yeah.
yeah, that's the problem with getting triggered out, and
Yeah.
being triggered out at exactly the wrong time. So you try to
Yeah.
time the market from a price perspective.
Yeah.
Yeah.
Anyway,
Yes.
that's where I think we are.
Michael Oliver admits one thing up front. His team underestimated how deep silver's correction would be. But despite the sharp decline, he insists nothing has changed in the long-term bull market. According to Oliver, today's price action looks remarkably similar to previous corrections that frightened investors right before silver surged to new highs. In past cycles, silver spent months trading inside a range, then suddenly broke below support. Many investors believed the bull market was over, sold their positions, and watched silver reverse higher almost immediately. Oliver argues the same pattern may be unfolding again. His biggest focus isn't price, it's momentum. While silver and gold recently made new price lows, their long-term momentum indicators did not confirm those lows. That's known as a bullish divergence, and historically it has often appeared before major rallies. He warns that if silver climbs back above the key $60 level and gold pushes just slightly above recent highs, today's breakdown could be exposed as nothing more than a bear trap, forcing bearish traders to scramble out of their positions. Oliver also believes investors are paying too much attention to headlines. War didn't produce the expected gold rally. Stocks ignored bearish news and continued climbing. To him, these unusual reactions suggest the market is already pricing in something very different beneath the surface. At the same time, he believes cracks are beginning to appear in the broader stock market. While indexes have remained resilient, he says long-term momentum is weakening, which could eventually trigger a much larger decline. Meanwhile, gold and silver continue to show healthy long-term momentum despite the recent correction. Oliver says the biggest mistake investors make is selling during emotionally driven pullbacks. Many who exited during previous breakdowns never found the confidence to buy back in until prices were much higher. Finally, he points to several technical trigger levels that are sitting just overhead. If gold and silver reclaim those levels, multiple buy signals could activate almost simultaneously, potentially leading to a very rapid upside move before most investors even realize the trend has changed.
And I usually when these traps are sprung, the reverse of it,
Mm-hmm.
they return to the upside.
Mm-hmm.
And by the way, the breakage that we suffered in gold and silver was evident on the price,
Mm-hmm.
daily, weekly, monthly, but also evident on intermediate momentum factors. Factors that once you break them, they're good for maybe several months, maybe a handful of weeks, etc. None of the long term, like annual momentum of silver and gold, this drop is just a drop. You're not breaking anything.
Uh-huh.
Yes, it's a sharp drop, but it's a zigzag within a long-term uptrend process of which this drop does not break anything. It's just a counter trend move. So long-term momentum is not disturbed by this break.
Mm-hmm.
And the problem with getting out, if you're an investor now, if you're a trader, it's a different story.
Yeah,
We're
of course.
focused on the investors.
Mm-hmm.
If you got out every time the S&P, excuse me, that silver and gold did this thing,
Yes.
blew out a range low, for example.
Uh-huh.
Where did you get back in?
No,
Or did you? And I bet it was higher than where you got out
right.
when they broke the floor,
Yeah.
or you didn't get back in at all,
Yeah. Yeah.
which is like where I think we are right now. I think a
Right.
lot of
You
these
keep
people
thinking,
got
oh,
out.
this is
They're through.
yeah.
No.
You keep thinking, I'm not going to chase this thing. It's already too high, and
Yeah, yeah.
not from a price perspective. That's what goes through my mind. Why
Yeah.
you've been so helpful to me over the years, Michael. Last time we had you on, you said you're sure we're not going to break the $50 for silver on the downside. And it's looking like you're probably right on that again, so far at least. And I guess
Well,
your conviction is pretty strong given what you're seeing on the momentum side and so forth.
yeah, well, MSA did not foresee the depth of this sell-off. I'll admit that.
Uh-huh.
We did expect last November when we put out our last buy signal on silver long-term buy. It was at 56 bucks then. Our prior buys of the prior years have been 25, 35, and 56 in November. So our average price the last couple of years is down in the mid 30s somewhere. Okay. But anyway, we've returned to that last buy level at 56 bucks with November close. We did not, frankly, expect to see it come this low, but it did. But our problem with being negative is we don't see any long-term reasons to assume this is anything more than a washout.
Right.
To puke the market out of its weak holders, the latecomers who bought it at 100 instead of it last November or June of 2025 when it was 35. They got shaken out. And that's the problem with late entry.
Mm-hmm.
You're vulnerable. Don't blame the market for your pain. It's where you got in that mattered.
Yeah.
And in the long run, pulling back to 56 and now 58, 59, if you go up from here, you'll look back on this and say, oh, geez, I did it again.
How did I do that? Yeah. Well, that's what I've said many times. I've done it again. Oh, Magoo, you've done it again from the cartoon characters. And you've been very, as I say, been very helpful to me in that regard. I think it was in your last weekend missive, you talked once again about the most important gold-related technicals to watch, singular technical to watch. Can you talk about that for a minute?
Well, there's multiple layers of buy signals we have above silver and gold right now. They adjust down each week. The weekly numbers adjust down a bit. Monthly numbers will adjust down starting next Wednesday because we're into a new month. 3-month average comes down. Therefore, the trigger structures that need to be broken through to signal that that indicator says, oh, I'm back in positive mode. Again, we're talking intermediate type things, not long term. They never did break. They adjust down in your face almost. Not evident on a price chart, but evident on our momentum. Now, one of the last, I would call it one of our last metrics of upturn in gold is the 50-day average. It happened to be, it's not just a silly average. You know, for instance, gold broke under its 200-day 3-4 weeks ago. That to us, that's meaningless because it wasn't structurally important. You just wove it. You often weave these things.
Sure.
In fact, you did that back in 2023 and it was total false. But the 50-day average oscillator actually has beautiful structure. Repeated 3 highs that have come up and bumped the 50-day from underneath after having broken below it. Meaning you've set a structure on the momentum chart that if you plotted it, you say, oh boy, that's a quadruple top breakout if I break through it. You ever get back above the 50-day again? And I think right now it's going to be about 5,400 coming up here soon. That's our last buy signal trigger level. But most of our triggers will start about, I said 40, it's about 4,400, not 5,400, excuse me.
4,400, right.
Yeah. Many of our triggers will start to engage around 4,200. So we've got like 2 or 3 buy signal levels depending on which indicator on gold, and we have similar ones on silver. And frankly, the proximity of the one to the other to the next is so close that it's likely that if you even trigger the first one, it's going to have enough oomph power to get to the second one and get to, you get what I mean.
I see.
Sticks of dynamite that are all lined up.
Very rapidly.
And I think we're just below those levels right now. And we're positioned to, if we sneeze to the upside, you're going to start blowing this stuff out.
Yeah.
And which argues to us it's likely to be an upturn that is very rapid. Meaning you don't get a chance to rethink your so-called fundamentals. Okay.
Interesting. What about silver relative to gold now? How does that stand? Because I know once silver sort of breaks out above relative to gold, that's really another bullish sign for both.
That is, and the pullback has pulled silver back versus gold, obviously.
So, is this the end of the precious metals bull market, or simply another shakeout designed to force weak hands out before the next rally? Michael Oliver believes history is repeating itself, and if momentum confirms his outlook, today's fear could become tomorrow's biggest missed opportunity. If you enjoyed this breakdown, don't forget to like the video, subscribe to the channel, and hit the notification bell so you never miss the latest updates on gold, silver, and the global financial markets.